Hello, everyone, and welcome to this session on what is driving instant and inclusive payments in different regions. My name is Jacqueline Jumah, and I'm a technical specialist in digital payments at African Enda. In this session, we'll be sharing insights on the different enabling factors, promoting the deployment of various inclusive payment systems across key regions. This is through a discussion by industry experts and practitioners. And I welcome you all to interact with us through questions and contributions via the chat function. With us today, we have three guests. We have Kennedy Kipkemboi, the mobile money regulatory lead at GSMA. Kennedy is at the forefront of measures on how to regulate technology, stimulate innovation, and extend financial services to people around the developing world. We also have Anand, Raman, a financial sector specialist and independent consultant with over 29 years of leadership experience in inclusive finance, mobile telecommunications, and information technology businesses. We also have, I'm not seeing Carrie, so I think we're also expecting Carrie Su, a senior advisor at the Ant Group. Carrie is responsible for driving the global strategies and thought leadership at Ant International's policy objectives to bring more inclusive, green, and sustainable changes to the ecosystem. A warm welcome to you all, our panelists. I would like to begin the discussion by raising a question to you, Anand. India is now considered to have one of the leading payment systems in the world, real-time, uses biometric identifiers, and is open to a vast number of participants. But this has not always been the case. In your opinion, what were the key enablers that allowed India to make this progress in a relatively short period? Anand.
Thank you, Jacqueline, and thank you for having me on for this webinar. So, you're right that it is a relatively short period of time, but just to give the listeners a sense of what that short period of time is, it is close to 12 or 13 years. So it's not exactly a couple of years, it's taken a long time coming. But yeah, one could say that the progress has happened kind of in leaps and bounds over short periods of time. I would say that there were various factors, and I've pulled out 5 for this conversation that I think were the major enablers. First, regulation. Second, a major push on financial inclusion. Third, some very good infrastructure build out of digital rails. Fourth, some very good innovation by market actors. And lastly, some unexpected things like COVID, which all of us experienced. So just to go a little bit into that, in terms of regulation, from the very beginning, the central bank has been supporting the development of the digital payment system. Going way back into 2009, there were multiple initiatives that they supported, including the creation of what is called the National Payments Corporation of India, which is today the anchor institution that processes and supports a very large variety of digital payments and retail payments. Second, I mentioned was a very big push on financial inclusion. So up until maybe 7 or 8 or, say until 2013, 14, India still had less than 40% of people, adults had bank accounts. And there was a very big push by the government, largely to enable government-to-person payments, welfare payments, kind of driven by the desire to reduce leakage in welfare payments. And there was a very big push by the government to create bank accounts. Now, of course, this was enabled by the next item, which is infrastructure. So the infrastructure build out, in order for people to have bank accounts, you needed to have identification systems. So there are a number of elements which are collectively called the India stack, but things like a digitally, remotely verifiable identification, a unique identity called Aadhaar, that played a very important role. And Beyond that, NPCI, the National Payments Corporation of India, that built very significant infrastructure, which we call the digital rail, and also had very good governance and institutional architecture that took care of the business and technology infrastructure. The fourth was market innovation. Because of support from regulation, some very interesting market actors, including people like Google Pay, WhatsApp, and some very many local variants. They built out very user-friendly apps. They discovered new use cases. They created incentives for adoption, and all of those things also help. And lastly, I think all of us are familiar with COVID, so I don't need to go into that. But just the problems that it caused in terms of proximity and being able to literally, shake other people's hands or do business as usual that we used to do before COVID. That also led to a lot of acceleration and adoption, in retail payments. I'll stop there.
Thank you. If I may delve deeper in terms of India, still on the India case, going forward, what do you think should be prioritized to ensure that the payment systems are inclusive?
Yeah. So despite a lot of the success, one of the things that remains a challenge is that there are still maybe 200 to 300 million adults who don't really have or use digital payments on an ongoing, regular basis. And that is partly because of the lag between adoption of things like smartphones and telecommunications and so on, right? So as telecommunications start to become pervasive, these things start to go a little bit more downstream. But you also need to have accompanying things like cash in, cash out infrastructure that allows people to get confidence in the fact that if someone sent you money, that's actually money and not just some text message that's appearing on your phone, which if you go try to withdraw cash, the agent is going to say this is not real money. So I think that's a different matter. So, it requires a lot of trust building. So that's something that needs attention. Offline use cases, I think, start to become very important, particularly in a very large scale, very large and populous country. I'm sure that this will have similar implications even for, say, populations of 40 to 50 million in a country. But India is, of course, 1 billion plus people. So having very large numbers of small value transactions becomes problematic. Failure rates go up because you're trying to send transactions that are, let's say, millions of 10-cent transactions are competing with some transactions that are $500. And of course, the 10-cent transaction, if it fails, it really doesn't matter. It doesn't affect the urgency or the impact is low. Whereas if you do have failures of large value transactions, it causes all kinds of problems for people, right? So I think those things, offline use cases, and then discovering use cases, whether it's transportation or toll tax and things like that. Those are things that need to be worked on a little bit more.
Okay, thank you. Exploring additional use cases. My next question goes to Kennedy. In the case of Africa, we've found out that the usage of mobile money exploded across markets during the COVID-19 crisis. It's good news, yes, that providing access to mobile money accounts is an impactful way of expanding financial inclusion without the need for opening physical branches. At the same time, mobile money accounts alone do not provide the financially vulnerable with the full range of products and services. They need to live financially healthy lives. How can central banks contribute to consolidating payment systems infrastructure so that banks and other non-banks, that is to say mobile money providers and other e-money issuers, can offer payments through single centralized instant payment inclusive systems?
Yeah, thank you, Jacqueline. I think that's a very interesting question and a good observation that mobile money cannot do much on its own, and evidently there's need for partnership within the financial ecosystem to fully tap into the mobile money services. So currently, if I could just start with the numbers, which I think maybe the audience probably has a good knowledge of, the mobile money currently has around 316 deployments spread across 98 countries. And we have slightly over 1.35 billion registered customers. Indeed, it's a huge number. And the question of how can product diversification be achieved is something that I think the industry really puts as a priority. Evidently, there's a shift to more centralized solutions where mobile money are able to interconnect their platforms with other service providers. And this is obviously something that is actually led by central banks. And you raise a very important question that how can central banks be able to effectively implement this, to be able to fully tap into the payment service and financial services in totality. What we have observed is that, well, the issue of interoperability definitely is quite key for most service providers to scale. But we have seen, of course, bilateral interoperability taking off in certain countries, but there's a perception that perhaps more can be done. And now touching on the issue of instant payments, which the industry views as an alternative of interconnecting platforms, other issues have arisen in the manner in which this has been deployed, and we are fully engaged with central banks in some of the ways they can be able to do this efficiently. Number one is the issue of the commercial viability of some of these instant payment solutions. I think generally the message that we get from the industry is that perhaps more can be done to be able to make sure that the approach is not one size fits all, and that perhaps the need for context is something very important. So for instance, the context in Tanzania could not perhaps be very similar to the context in Ghana. And so there's an issue of trying to contextualize some of the solutions in order to be able to ensure that all players are fully tapped into the whole process. Some of the other issues we've seen where central banks have requested for support on and guidance on issues such as governance. When it comes to instant payment solutions, I think for acceptance, one of the things we have seen for all sector players, including banks, is whether everybody has a voting right on some of the solutions which are, propositioned. And it has been a subject of discussion in many boardrooms when it comes to how instant payment solutions can be effective in the different markets where it is deployed. Perhaps another issue that is actually coming up quite often when it comes to the issue of interoperability and centralized solutions is also the issue of technical compatibility. I mean, there's a recognition that, different platforms have different, ways in which they operate technically. And the big question always becomes, how can all these platforms be made compatible in a cost-effective manner? And also by ensuring that risks which could come up with interconnecting different platforms are securely and adequately addressed. So I think by and large, these are some of the ways we feel like the regulators perhaps could be able to narrow their view on to be able to ensure that the entire conversation around interoperability becomes quite efficient. But before I just end the conversation, I think there's a genuine need for all platforms to be interconnected. Particularly when you look at new players who are coming in, the fintechs, I think there's opportunity and they bring in new product offerings which both sides of the divide could be able to benefit from. And ultimately, a more interconnected platform would definitely lead to more yields and more offerings to customers. And at the end of the day, I think financial inclusion will actually be driven as is expected.
Thank you, Kennedy. If I might just do a follow-up, of course, given that we've seen mobile money really grow, and there are some mobile money giants in the continent who, to some extent, we've seen a lot of them complain around interoperability issues because of legacy concerns and sunken costs. What would you recommend as the focus for central banks to encourage their participation?
I think I like how you have worded the question, participation, and I think really and truly that is where the hook is in ensuring that all players are involved in that conversation. In some countries where we worked closely with our members on this particular topic, one of the challenges that arose was the fact that that industry players felt like they were sidelined in some of these conversations. And by the time they're being brought on board, it seemingly appeared to be a bit too late. So it becomes more of a mandate, which sometimes is not well received by many industry players. So I think ensuring that all participants are involved when it comes to stakeholder engagements, and ensuring that their views are taken in at the right time is something that central bank perhaps could do to ensure that perhaps there's more acceptance. But more importantly, I think there's also the issue of just trying to narrow down to the different commercial models for different players. So for instance, when you look at banks, for instance, who have been in this financial space for the longest time, they do tend to have various revenue streams. So they'll probably be able to offer credit, they'll probably be able to offer insurance and other portfolios, which mobile money providers cannot be able to. I mean, technically, mobile providers are only licensed to offer payments. So when you look at the commercial propositions, it limits mobile money providers. And at the end of the day, there's that lens where sometimes you may need to contextualize and say, oh, perhaps when it comes to the commercials, there's need to be able to tweak certain aspects to make it more lucrative and more sustainable for all players in that conversation.
Thank you very much. I think my next question goes to Carrie. Thanks for joining, Carrie.
Hi, Jacqueline.
Welcome. When you analyze the data around financial inclusion, sorry, I thought there was someone else's mic on. Thank you. Carrie, when you analyze the data around financial inclusion, what is happening in China and the Southeast Asia, what we see is a success model. With the rapid creation of super apps, countries such as China have steadily improved both access and the optimization of financial services over the past 15 years. Could you tell us a bit more about Ant Group and how you contribute to making payments more inclusive?
Yeah, thank you. First of all, very pleased to be here. Sorry for some technical issue. I'm here right now, so that's good. I think, Ant Group has started 18 years ago, simply just to bridge the gap between buyers and sellers on an e-commerce platform. So back then, I think that is still very forward. But what is interesting is as our service expand, our customers can also increase their digital footprint. So I think that alone has created a lot of possibilities for people who've never accessed the financial system. So interestingly, we recently did a joint study with the BIS, and we contributed our data set. And there's a definitely very strong correlation between QR code acceptance to access to financial. So I think having that first point of acceptance is very critical for a lot of these underserved merchants to be able to at least come into the system, to be included. So similarly, today, I'm in Singapore, and we've seen a lot of the development in the past 2 years, especially during COVID time, how payments platform have become a very critical infrastructure, very trusted infrastructure, not just for the consumers, but also for the public sector governments. So when they are distributing their consumption voucher, they also look to a lot of these payment platforms to distribute those vouchers in a very efficient and seamless and safe manner. So I think that is definitely bringing the whole fintech inclusion to the next level, because now you don't really need to go through the cumbersome process and worrying you may not have the credit history just to simply to hold a bank account, right? I think payments platforms have done a lot of that functionality. And the beauty of payment platforms these days is they're able to scale beyond just payments. So we also see there's a lot of digital lifestyle use case, marketing, ITO, everything that comes onto the platform. So I think this is where we see there's a lot more different forms of collaboration between the different stakeholders within the ecosystem. So you have someone specializing on API integration, but really serving the banks where the pain points really are, because a lot of the banks, we're not talking about the big banks, but maybe the banks in the second, third tier. So they, first of all, they by business model, I think they don't focus on SME. So I think that's a big distinction. But second of all, I think they also don't have the in-house expertise, engineers to maintain the system that they procure. So this is where technology becomes very versatile, because through technology, different players can come together and contribute where they are good at, right? So we as a group actually have been experimenting different types of collaboration. So for example, we have done in Thailand is we work with an e-commerce platform, and then also a local bank where the e-commerce platform will contribute the data set to the bank, and then the bank will be licensed the credit technology that we provide as a solution provider, and then at the end, the bank will underwrite loan. So that kind of tripartite model is like one example to show, increasingly we'll see many more different forms of collaboration, and where interoperability will be important, right? Whether it's like data interoperability, where it's like, system interoperability. But I think one point that we've seen as well, because I think outside of China, we actually focus on more B2B type of model. We don't run our own wallets, but we're looking at the next, solution to bring all these platforms global. So we focus on cross-border payments. So cross-border payment itself is also very challenging. I think it was mentioned just now, government is also rushing into this space, right? Looking into how to enhance government-to-government connections through instant payment rail. Then I think there's a wide spectrum of consumers who are looking for different purposes for whatever payment methods they're using. So I think my prediction is that there will continue to be fragmentation within this space, especially on the cross-border space. But what is important is ultimately all these systems should talk to each other, because we, as a solution provider, we're working with a lot of e-wallets, so they can focus on domestic business while we add on the complementary functionality they need to scale beyond their own home country. So we will have some sort of like system interoperability amongst our solutions for our stakeholders, but we also want to serve our consumers who just want to have a choice to use different types of payment methods. So that's just where I see there's more convergence on a micro level, where all these payment systems will talk to each other and each other through some sort of interoperability. So today, if I want to pay in cash, or I'll make this an extreme example. Today, if I want to pay in stablecoin, then somebody on the other end should be able to receive it just e-wallet values, right? So I think that ultimately will really achieve the digital inclusion that we talk about today.
Okay, thank you. And what would you say were the most supporting pieces of regulation that enabled, or what stood out in terms of regulation and enabling Ant Group to, ensure that the payments are inclusive?
Yeah, I guess when we talk about enabling regulation, I guess we may want to frame that question a little bit, what that means. I guess obviously, when as a company, we follow, whatever regulations out there. But I think as a company, what we are good at is we look into technology and how we use the technology to resolve our pain points. I think a lot of people, when they look at Ant Group, they feel like we are a financial services company. But if we roll back the clock, the reason why we get into financial services is because back then in China, there was a lot of resistance, from the incumbent banks to really look into the market pain points and how to bridge those gaps. So from our perspective, we want to get into the financial services, but using a very smart technological way and see, what type of solution, we would develop in-house to address that pain point, and ultimately we can scale it across the border, right? So I think we use a lot of technology just in terms of managing our own internal risk. Obviously today, RegTech is also, there are a lot of companies who are focusing on that. It's not something so new anymore. But I think throughout that process, we also help our regulatory counterparts to understand how we are using technology to monitor risk, to manage risk. And then I guess today we are at a place where we are able to sell the solution to the market as well. And there's some sort of market standard on that. So I guess if you look into how we are using technology to enable smarter regulation, I think that is something that we have been invested from day one, because if we are able to manage our own risk, then we can also lower our costs, and then we can pass the benefit back to consumers. Obviously, today we operate outside of China in more than 50 countries, regions, and we have also spoken to a lot of regulators. I think it's also natural that there will be adjustments in the regulatory environment where we're operating in, as more companies enter into the space. I think there needs to be more alignments and consistency, how consumers are being protected and how privacy data are being treated. So I think consumers are very savvy these days. I think they're getting more and more sophisticated. So they will also be the one, telling the regulator, telling the government who they want to work with, whose product they want to have. So I guess from a company perspective, while we continue to help our stakeholders to understand how technology can benefit, we also want to continue evolve ourselves within the environment that we are operating under. I think that itself will continue, change and shape up, but we can be part of that conversation. So I think that would be my perspective of that question.
Thank you very much, Carrie. I think my next question would be, given that there's been a significant increase in terms of digital payments across countries in the last couple of years, do we anticipate that this growth is going to stay as is? Do we anticipate more growth? Or do we see a risk of losing the progress, getting to some level of plateau in the coming years? And this is an open question to our panelists.
Yeah, I'll have a crack at that.
Thank you.
Yeah, I don't think the clock is turning back on this one. So it's just going this way, one way. There is going to be technological change that will allow us to appropriately digitize a vast number of use cases, and the volumes of these transactions will continue to grow. I mean, there is a physical restriction. I mean, the reason we are able to have this conversation on a digital forum is the reason why a lot of this will continue to grow, right? There are people from across continents on this panel that we are having this conversation. Wouldn't have been possible a few years ago. And this is not going to go back. People are going to continue to want to do this over a period of time. And the same applies to digital payments. Cash is just terrible at moving from A to B. It's just horrible. It just doesn't, it does not take well to being moved over long distances. So there is no doubt in my mind that this is just going to accelerate. Having said that, there are tremendous risks too, right? So it's a lot easier to run away with, to hack into some computer system and steal money than it is to vanish with a truckload of cash. That also is a problem, right? So there are both sides to it. Having said that, I think there are genuine benefits. So remote payments, most certainly huge benefits in terms of growth, and that will just continue to happen. One of the biggest barriers that remains unsolved today is cross-border remittances. They continue to be untenably expensive. There is a lot of hope from things like central bank digital currencies and so on that's going on, which will hopefully bring down the price. I think a few years ago I was checking, I don't know what it is right now, the dollar is on a very, very big aggressive growth. So it was almost 6 to 7%. The cost of sending a remittance from a, let's say, international inward remittance was 6 to 7%, which is criminal almost. It's just unsustainably high. And typically, a lot of people paying this kind of money are not very rich people. They are poor people, they are migrants who go out there and they try to send. So I think that's a use case that remains very hard to solve. I'm not aware. There may be solutions out there that solve that problem or not. But yeah, I don't think there's turning the clock back on this. The technology, computing power, telecommunications, smartphone usage, good user interface design, multiple use cases, all of these things are improving. And therefore, there's no reason to believe that we're going to stop using this. I'll just say one last thing, which is none of this means that cash is going to go away. I'll leave it at that.
Thank you, Anand. We have questions from the participants, or there's a question from Ruben from Malawi. Ruben says, in terms of market readiness for a national IIPS, what indicators will a market that is not yet ready for launch of a national IIPS exhibit?
I think if I could, I can take that, Jacqueline, and perhaps from a mobile money context. One of the things we have seen when it comes to market readiness touches on how mature customers are when it comes to using mobile money services. There are markets where we do note that financial literacy is still a challenge. So, mobile money services could be available, but not so many customers or people know about it. And in such a market, I think it would be, for lack of a better word, premature to introduce that, because you're already dealing with a case where, users don't even know that these options are available. So I think it takes me to the point that one of the things that is important to note is to ascertain how ready a market is for some of these solutions. If I could use an example of, countries such as maybe DRC Congo, you will realize that, in as much as we have mobile money, one of the challenges that is faced in the market is that many users prefer using over-the-counter options. So as opposed to being able to put money in their wallets and using their wallets to send money to somebody else, or access all these other use cases, they would rather go to an agent and try to ask the agent to send money to another agent in a different part of the country and all that. So I think such nuances are very important when coming up with some of these innovations, and it would be good to be able to undertake or carry out a landscape analysis so that you can also be able to manage your expectations on how well some of these solutions can be able to be received by users.
Okay, well said. Another question from Kin Femishel, I hope I spelled the name correctly, from Ethiopia. What is the practical role played by the open system rail provided by NPCI in digital payments? And what do you recommend for markets with payment ecosystems that have several players offering fragmented and closed loop systems?
So the National Payments Corporation of India plays a very central role it's a special entity with a special license from the regulator, which does everything from build the technology, operate the technology, manage the settlement, manage the governance of these institutions who are participating bodies, and also innovate in terms of how to develop newer and newer products and services that can allow the growth of all kinds of payment systems, not only retail, also other kinds of payment systems. So the National Payments Corporation of India has played a very critical role. In terms of recommendations elsewhere, I think one could kind of think about it in terms of cash, closed loop systems. Just imagine, I'm not familiar with which country you are, but imagine that your country has districts, and every district decided that they want to have their own cash. You'd pretty much be dead in terms of being able to function within the country. And that's the problem that is solved by cash that is issued by the central bank as a sovereign currency. Essentially, it's one currency that everybody can use interoperably. And that's the key. So I mean, having different silos is just unhelpful in the long run. And maybe some amount of regulatory, what shall I say, enforcement almost. It's necessary for the regulator to step up and solve this problem, because ultimately it's hurting the economy. And the central bank is really, the control of the monetary policy and infusion of cash into the currency. These are central roles of the central bank, primary roles. And therefore, without interoperability, huge amounts of inefficiency creep into the system. And I would simply say that it's not an easy thing. I'm not trying to trivialize the problem. Coming together, functioning as one unit means a lot of trade-off. It's important that the little guy also has a voice as much as the big guy has a voice. And these are players that are competing with each other in market space, but they still need to, have the magnanimity to allow the little guy a seat at the table in terms of governance, architecture, and so on. And that's something that the NPCI has been able to do. So even if you are a small participant in the payment system, there are often committees where you could be a small guy, meaning a small payment firm or a smaller bank, and you could be the chair of a committee that is taking a decision on a product that is of value to you and say 10 other banks that you're developing. So I think that's kind of the central role that the National Payments Corporation of India has done. And in terms of lessons we learned, I think interoperability is extremely critical. It's not something that you can leave to market forces to resolve too much. It is one of those externality problems, incentive problems that everybody has, that is necessary for the regulator to step in to put some amount of moral pressure to solve for the market. I'll leave it at that.
Well said, thank you. Another question from the audience, and it says the expansion of instant payments presents a serious challenge with fraud. This can be contained to an extent within a country, but when the payments go regional, what steps should be taken to deal with potential fraud? Anyone?
I actually want to hear what Carrie has to say about that. She's running. She's the only one who's in a firm that's running multiple payments in multiple countries. So.
Yeah, just to clarify, we don't really operate our own wallet outside of China. Yeah, but I'm not sure I really understand the question. But obviously, when the payments is cross-border nature, then it's a lot more complicated, because then I think the general expectation from regulator is also much higher. So this is also the a conversation we've been having, just like trying to work out with our e-wallet partners to get that wallet be accepted outside of the country, and like what are the additional AML requirements we should manage, right? Obviously, I think that from an operational standpoint, then you basically will need to have a much more robust system. So if you look at Visa card, MasterCard, they have very comprehensive rules simply governing around fraud risk, chargeback risk, and AML risk, right? So I think what a lot of our partners were quite reluctant to go cross-border simply because of these reasons. Because when there are additional requirements, that means there's also additional cost. So it's really down to whether you're working with like global partners who have that database, that you can have the information you need to make that informed judgment decision, right? And also what kind of engine, what kind of AI machine learning tools you are actually using to improve the accuracy of your projection of the risk itself. I can't speak of the instant payment rail nationally. But I think from a company standpoint that has been in this space for the past 5-6 years, I think that is a big investment, and this is where the value will come, right? Because when we add on this Alipay Plus cross-border solution to our wallets, we are also doing it in a very scalable way, so they don't need to suddenly invest heavily into something that is not tailored to the domestic needs. So I think in a way it's good to have standard, but so at least everyone knows, like, generally what is that international expectation is, so they don't get themselves into trouble as well, right? When they want to like go beyond just their country. I think really you need to find the right solution to manage the risk, and also make sure like you're accessing the right database, so you can catch those potential fraud risk very early on. Yeah.
Thank you very much, Carrie. I think we are almost at the end of the session. A big thank you to our panelists, a big thank you to the audience. As we wind down, I'd like to request that our panelists share their parting shot by just saying what excites them in terms of initiatives or even trends around inclusive payments, across jurisdictions.
I'm happy to take that, Jacqueline. Perhaps what I'd say from a mobile money industry perspective is that we see a lot of opportunity around remittances. And given that, currently we're seeing a lot of challenges when it comes to regulations on international remittances. Most countries, especially in Africa, still restrict outward remittances. So once, of course, that hurdle is handled, I think there's a lot of opportunity around integration of platforms in order to allow for, monies being able to be sent from one country to another, and not just within the region, but perhaps also globally. So I think this is something that we are keen on, and we are hoping that, more of such solutions would be able to be deployed.
Thank you very much, Carrie.
Yeah, I think as a company, we focus a lot on tourism. So now with like the situation more stabilized, we see definitely in this region there's a lot more travel and tourists trying to go to different places. And I think it's exciting because we've seen how a lot of the SMEs really struggle during the pandemic. So a lot of the uptake of digital solutions are online. So I think I'm quite excited to see how potentially these SMEs could, tap into the user base, but convert this opportunity offline as well, right? As people are moving physically cross-border. And then as a company, we heavily invested not just in payments, but also digital marketing capabilities, because I think this is where a lot of these SMEs struggle, because for SMEs, they really need to have that sustainable flow of customers coming to them. And this is where technology could help. And then with that sustainable commercial incentives, then, there's also more motivation to stay digital. And this is where they will build their digital footprint, and hopefully that will kind of bring them to the next level of their business growth where they need to be.
Thank you. Last but not least, Anand, your parting shot. Thanks.
Yeah, I'd say there is kind of lots of room to be excited, because we have a very, very, I think on balance in say Africa and large parts of Asia, we still have feature phone penetration that is upwards of, I'd say 30%, 40%. China is different, but everywhere else, I think we have fairly significant feature phone penetration. People still haven't moved to smartphones yet. So a lot of innovation that's happening, including in India, such as UPI Lite, which is looking at the use of voice for making payments, voice calls to complete payments, transactions. Feature phone use cases are one very good thing. Offline use cases where you have near field communications, those kinds of things being used, but with feature phones or smartphones or cards or other kinds of devices, those will create some very interesting use cases. And lastly, I am excited about the potential of central bank digital currencies, particularly with respect to small value and offline retail payments. I mean, I think in PCI processed something like 6.57 billion transactions last month, right? 7 billion transactions or something. Very large volume of transactions. Now, the average ticket size of these transactions is less than $10. It's just, from even a climate and from an energy standpoint, the amount of energy consumed for a $1 transaction is the same as the amount of energy consumed for a $10,000 transaction. So it's really, the burden is not worth it. It's much easier for you to simply do the cash transaction or do something that's equivalent. So offline use cases solve that problem, because by doing a transaction in central bank digital currencies, essentially you're removing the clearing and settlement overhead that commercial bank money incurs in the process. And I am hoping that we will have some very interesting innovations, at least for small value transactions, as central bank digital currencies start to come up. One use case that at least India's central bank, the Reserve Bank of India, is pursuing is cross-border payments. So it's possible to maintain reserves of currency in central bank digital currencies of another country, and then do the settlement between one central bank and the other central bank, as you would do today. Except you don't need to have all of the correspondent banking and SWIFT and this and that and the other. You can eliminate all of that if central banks are going to settle these retail payments. So I think, to me, CBDCs are an exciting development, and we might yet see major cost reduction and increase in adoption as CBDCs take off. It might take 10 years, but we might get there.
Well said. We've come to the end of the session. Thank you very much once again to our panelists and the audience. I think at this point, we'll see you in the next sessions. Thank you.
Thank you.
Thank you.
Thank you.